Alright, it is Sunday night, the weekend of October 27th, and welcome to the Trader Hub Weekly Market Review. Taking a look at the price action for the indexes last week, starting with the NQ as always. I do have the daily chart popped up here to start this time, since I do think it does tell a better picture. Last week we kind of mentioned that we were having some nice holds and really had a great look coming into this week with a great kind of close on Friday, kind of holding the high of this range and closing back above the line, not by a lot, but actually ended up closing back above 462. Had some attempts at continuation early this week on Monday and Tuesday, but couldn't quite make new highs. So what ended up happening is we ended up taking this pretty heavy red day on Wednesday, but with actually a really great buy-up. I know that we'd mentioned over a couple of weeks ago that if we saw lower, I was saying even as low as 20,012 was still viable for a hold and possibly a regain. Looks like they took a little bit higher, that closer to 20,080, but really anywhere in this red box zone, this like major level in this range here, we were looking for a nice hold and then a retracement with ideally a wick, like closing back above a key level, and that's exactly what we got. So on Wednesday we had this nice wick down that ended up closing back above 20,000, and we have this mark 20,034 as its own line, and also as a fib retracement from the origin of the reversal here. So that's a nice consolidation of those two levels making sense. And what ends up happening is, so they kind of licked out the stop losses from all the longs that were around that 20,230 zone, and then they also on Friday had a big a pump that took out all the actually made a new local high, higher than the previous high from October 15th. And then that actually got sold back down into the range too. But as you can see now, on Sunday night into Monday mornings, will be this daily candle. We're getting actually a gap up, and that is not a contract change, that is a natural gap up. So the market actually gapped up, and then we actually saw some continuation here. So if the idea here is super locally, if we can, really it's going to probably be around there, 20,650, right, where the last failure is. We didn't get any closes above, so we came back down on Friday's close and tagged there. If we can close back above here and continue higher, we should probably make new all-time highs. But I know that's kind of a lot to talk about here, but higher time frame, this is a great look for continuing higher. It's been a bit of a wild ride last week in terms of kind of getting a trade that's going to hold, because they really did stop like both the longs and the shorts out at the same time. On Wednesday they stopped out all the longs with that big wick down, and then Friday they took out all the shorts that were present from the recent swing high. So it's been pretty hard to get a trade here, but the nice thing is it does look like the trend is continuing higher. Higher time frame levels still looking at 20,750. If we can get closes above up there and break that range, we should continue for all-time high as well. So all that is to say that the NQ, we've had about 2 or 3 weeks of pretty strong consolidation here. It's been kind of uncertain if we're going to continue higher here, but it does look for now like we're going to get that move even higher, so we'll have to see if we get that this week. Switching gears a little bit over to the ES, I know we mentioned last time, we were at all-time highs and kind of marked out a zone at 5,910. We just need to gain that for continuation higher. We've slurped down a little bit, and we're kind of back in the range. Now, of course, because we went lower, technically you could potentially see another failure at 5,910, and that would signal even lower and potentially at least a short-term reversal of the trend very locally, and potentially a longer term if we get continuation down. But when we're this close to all-time high, it's a bit ridiculous to kind of say we're imminently reversing for a bigger retracement down, although it is possible. We don't really have confirmation of that. So this week definitely have our eyes pinned at 59.10. If we can make it back above that, we can just say that we slurped lower for more liquidity, continue higher. If we fail that level again, we'll probably be looking for levels below 5,800, so probably this 5760 level, but we'll have to kind of wait and see what's happening. On the other side of things, on the small caps, this is probably a more interesting chart because this is actually kind of one of our quintessential trade setups, like really good setups. So we'd mentioned last week that, getting a close up here, really wanted to see closes above 2260, and we did end up getting those into last week's close, and really it's some nice looking holds, right? So all the like little tags into the actual high at 2287 looked like great for holds. We actually didn't end up losing that level, and also 2260. So really there's kind of really two things that are catching my eye right now, which is sort of this level that we've broken back above and held. This is the failure, this zone that sent us up to the new high, and also the level that we're holding right now. So really, this is the level to hold currently at the local price action. Call it 2220. So 20,220. We could make it look a little bit cleaner there on the numbers, but that's kind of the zone we really want to see hold. But if we can't gain back above 2287, it looks like a false breakout and probably more likely lower. See, one of our really quintessential high probability trade setups is that we define this range that needs to be gained, and it's trying for multiple times, which puts in this really well-defined structure, right, where the market has to gain that or it's going to move down. And then we see it gain it and then immediately lose it and close quote-unquote back in the range down here, and then you would take a trade at the retest of that zone expecting even lower. So this is technically a short setup, even though this hold does look like, a potentially decent long. You could even trade both sides of the market. Taking a long here at 2,220 is a viable long right now. However, the bigger trade is probably somewhere up here, 2,287. If we can tag that zone and fail it again, new lows lower than this level to hold, 2,220, are much more likely. I would be expecting, if this failed to hold, and we didn't take the level to hold here at 2,220, we'll probably come all the way down, probably at least to 2,150 is my guess. So that's a nice trade for about 130 points. Really, there's two ways I see it. Is we're either going to gain this and that whole short leg will be invalidated and we'll get a huge rally probably off of that, or we will fail this and see a deeper retracement. So I'll even pop this in here as a potential idea. So super locally, this is kind of what we're looking for on the daily chart for the RTY. We'll have to wait and see. It's going to be a pretty big move either way. I think when we get here, we're either going to gain and just pump, or we're going to fail and take a deeper retracement, like I said. But this is one of our A+ setups to Trader Hub. We really like this look for a reversal trade, but we'll have to see what happens this week. Back on over to gold. We mentioned last time, prior to last week, that we were kind of looking at gaining 2680, and if we were saying that if we could gain that, we would pump, and that's what we saw last week was really kind of continuation of gaining that and going. But this week was a bit more boring. We're consolidating at highs, so that doesn't mean that we couldn't see a retracement back to 2680. If we do get that, it would be a phenomenal long setup since we did just gain that. But right now we are at all-time high, just consolidating. There's really not a whole lot to say here other than we could consolidate and continue higher, or we could, come back down for another little retest of 2681. And if we do, it would be a phenomenal long setup. But we'll have to wait and see what we get. So there's really not too much to cover on gold. It's just continuing the pump up, the slow pump up, or rather, in this case, actually pretty incredibly fast grind up. But it's very linear is what I'm saying. So nothing unexpected, and certainly no change in the upward trend on gold for now. Dow, more of a clean kind of, failure and retracement. So we spent a lot of time gaining 42, and it's really probably more like this. Well, actually, no, I don't think so. I think I was right initially. So around 42,660, 660 that is. It would have been a nice continuation look to see that hold, but we've actually closed below. So we're either probably going to regain this and continue up and potentially retest up here, closer to 43,400. And if we can gain that again, we'll just see continuation. Or we could see that fail, because this is actually a lower low now after this consolidation here around 42,800. This is a lower low, so any retracement up here is potentially a higher low if we can fail that 43,400 zone. That's a big ask though. I would say we haven't quite invalidated the uptrend on the weekly chart. The daily looks like maybe we could be in the process of doing that, but we don't have confirmation yet. And I still think that some long, like if we regain 42,660, longs to 43,400 are absolutely viable. But the long-term trend is potentially still intact on the way up. We just need to see if we can regain 43,400. It was a little bit more nuanced this week. Finally, a little bit more action on the Dow, but we're really kind of just hanging out at all-time highs. So until we get a failure down here, 42,400 for a new leg low. I mean, we're probably likely to continue up, but we'll have to see. Switching gears a bit more, I know that we've been really bullish on oil, and really it looked great on this retracement last week, and then we just had this really horrible open. See that it is not a back adjustment. This is a 2-point open. Actually, it's really closer to 3 points open lower than the close on Friday. So that's a pretty bad sign, in my opinion, because we've actually closed below the level that we would want to see it come back to and hold. So the way that I see oil now is, I know that we were just singing the praises of potentially having one of the best longs ever on gold, but if we can't gain back above 70.45 just to close back in this range, that doesn't even mean that we'll continue higher, then this whole move upward is probably dead and we'll probably see new lows. So kind of watch out for that. The move that I would want to see is a close back up here and a hold at 70.45, and I would want to see that move continue all the way back up and take out the origin of the shorts here locally at 76.17. That would kind of get me to really start talking more bullishly about oil again. But right now, I gotta trade the chart in front of me, and this is a bearish look. This gap down is not a good look. So we'll have to see what happens with that on oil this week. All this kind of uncertainty and talking about potentially seeing pullbacks and some markets reacting pretty strongly could be due to we've been talking a couple of weeks in a row now, almost a whole month, about really wanting to see the dollar, if we're going to talk about it coming back up, it needs to regain either 103.9 or 104.2. Well, last week we did both all in 1 week, so there's really no need to discuss the nuance between the two zones. We have regained on the dollar, which means that we can expect continuation higher until the market proves otherwise. This close back up here totally validates some deeper retracements for higher lows. If we go to the weekly chart, it would not be too unrealistic to see something even down to this zone 102.3s, or even this 103 even probably is a really great long zone as well, somewhere in this range. But either way, I think the big thing to take in, big picture here, is that the dollar, in my view, has absolutely regained all of the levels that it needed to kind of invalidate the downtrend. And so we could potentially see a huge dollar rally coming into the next, either the year end or even the, early next year, potentially even further, if we're going to have a longer term pump on the dollar. But, we're in this huge long-term, multi-year range. Actually, that's not the spot. Where is it? There it is. Between, call it 100 and maybe 106, if you want to get a little bit more surgical. So, we could see a lot of movement within these ranges, but I think locally expecting higher makes more sense right now after doing all this regaining. Doesn't mean we couldn't see some relief, retracements lower, but I think the dollar has done everything it needs to say that we'll probably end up seeing higher valuations on the dollar again. The really interesting thing will be to see if we can come up and really retest 106 again, if we can make it back up there. If we can blow off 106.4, we'll probably see a much larger rally closer to our initial target from about a year ago of 109, which would be incredible. But kind of a lot of nuance to these moves in the market recently, but that's kind of my expectation on the dollar. Kind of bringing it all home, I would say longing either a hold of 103 or somewhere in this zone, probably around 102.3, is not unreasonable at all. But we'll have to wait and see what happens in the market. If we get a continuation, then we probably won't see those retracements, or we could see those retracements and get some opportunities. But the actual banks, KRE, looking like a very similar move to RTY here. So if I just want to, I'm going to mark this level out. This was the level that price has kind of struggled to gain above, and I'm just using the previous high that we've gained, and then these wicks attempted to hold, we closed below, retested, and are moving back lower. This is potentially, this was the short entry for a huge retracement lower, and I'm not saying we're going to get one, but that was the test and the entry for that particular trade, right? You know, to establish a good time frame level that needs to be broken, fail it, and we, take the reversal trade on the retest of the initial zone, expecting it not to hold. So that was a quintessential setup, very similar to the one that I outlined on RTY. However, I want to point out that we could still absolutely hold 56.58. If we look at the weekly, that is kind of really the level that I tried to hold up, before we absolutely failed and made a huge new low all the way down in the mid 30s here. So, that level, 56, 58, is important. So that could absolutely be a hold, and one we've talked about before. If that fails to hold and we do not regain 59, 56 after a hold of that zone, I would expect this whole swing up to fail and probably retest quite a bit lower at that point, and potentially down at 53, or even down at this zone again, just below 50. So probably close to the high 49s, something like that. We could get some pretty big retracements here if we do end up seeing this swing fail. But we'll kind of have to wait and see. I know that I've used that phrase a lot tonight, but really things are a little bit more interesting these days. We're getting these consolidations that are going to produce huge moves when they actually do break out. So the longer period of consolidation, the bigger the move you can expect. And we've got a couple of weeks of NQ being sideways and uncertain. The ES, we're gonna have to see what happens when we retest this key level, and the Dow had made a new low, so we could retrace back into some interesting short trades here, or we could just keep rallying. I mean, we'll just have to wait and see, but hopefully the outlines of kind of the levels that I was looking at tonight have helped you kind of figure out what to look for going forward this week. I kind of know my biases on NQ seem to be quite a bit higher at this point, but we could always fail about 650 here, so it'll be an interesting week nonetheless. But I'm kind of rambling on because, well, there's always something to talk about in the market, but it'll be interesting to see what happens this week. So thanks for tuning into the Trader Hub weekly market review. If you like this kind of content, sub to the Hub and consider joining our Trader Hub Discord community server. You can find it using our link in the description. See you next week.